Welcome back to another CY Mood Academy video. I'm Becca, and today we're going to talk about gold. Since ancient times, gold has been associated with wealth, money and good life for those who owned even a small part of it. It has been one of the most sought after and extracted from the bowels of our planet, and human beings have always seen the value given by its scarcity. Used since the mists of time to give value to the currency of all peoples, we Westerners had the gold standard until the beginning of the 20th century. In fact, the value of the currency issued by our central banks was backed by gold, which guaranteed its value. This system was abandoned in 1971, but many still consider gold as a fundamental asset for their investment portfolio. In fact, gold is considered a safe haven or harbor, where to take refuge every time the specter of galloping inflation returns to disturb our sleep. Especially for critics of fiat currencies, gold is an excellent investment to maintain or increase the value of their investments, and to protect themselves from the wild print of currency created with fiat currencies. Remember that gold is a finite resource on our planet, hardly available and in limited numbers. The central banks of countries that did not have much of it have been hoarding it in recent years. Many countries have large amounts of it declared, while other countries have preferred to dispose of it. This is a good example of the different strategy of the various central banks. Gold is also an industrial metal used in the production of electronic parts. In reality, its industrial demand is a small part of the world total demand, to which must be added the demand for raw material for the production of jewelry. Now we should ask ourselves, is it right to invest in gold? Well, as in all things, there's a better time and a better way, and these can only be understood by studying the structure in detail. Having a share of capital in gold is not stupid, on the contrary. This, however, must be seen primarily as a defense. This does not mean that you can't make a profit with gold, but as always you have to follow the trend. If we talk about price, by convention and as a general rule, the price of gold increases more and more than inflation, and this is not related to the trend of the stock market. In the event of a stock market crash, there is usually a race to grab the gold, and then sell the gold when the stock market rises vigorously. Gold has a volatile price and not a fixed price. It should always be considered the period and time of purchase and what instruments we are monitoring. In fact, there are more methods and instruments to be invested in gold. The main differentiation is between physical gold and financial gold. Financial gold is gold that we can buy through financial instruments such as ETFs and etc., futures or derivatives. In this case, we will not physically have gold in our hands, but we will have financial contracts that represent the amount of gold we own that we can trade in the main world markets. Obviously, in this case the choice must be made with regard to the instrument and all its peculiarities, relying on issuing companies that are more than reliable. The physical gold, on the other hand, is that gold that we can take home and touch with our hands. Generally it is not only jewelry, but just coins or bars, which can range from a few grams to kilogram. The unit of measurement of gold is the ounce compared to the US dollar. This gold can be kept in your home, obviously protected from burglar. Given the high value of the metal, in case you decide to buy more than a few ounces, it makes sense to turn to specialized storage companies to keep our investment safe. In fact, there are real risks in owning it, not only financially, but personally. Gold is not an investment for everyone. Another way to be part of this market is to expose yourself by buying the shares of mining companies. This is another method, however, which is totally financial and should be considered and studied as any financial investment, to which must be added the risk of the sector in which these companies operate. I hope you enjoyed this video and see you at the next one. Bye. Thanks for watching. Please subscribe and share our video to spread our knowledge. And remember to check all the product made for you by the CY Mood team.